Welcome to the StockManor.com studios here in the Black Hills of South Dakota. I'm your StockManor, Brian Johnson, and been away for a while, but did a lot of work to the website, did some updates, and was able to continue doing daily videos for my subscribers. Just didn't have time. Was really busy doing other stuff and hadn't done any daily ones, but back again. Thought I'd do a quick update for you guys. And then I'll be back again, probably, hopefully, on a more full time basis next week. We'll do a couple of videos next week for everyone. And so make sure, keep checking back. I should be back in action. Tell all your friends that maybe have wondered where I was. I'm back. I never left, actually, to be quite honest with you. I didn't take a vacation or anything. I just was really busy doing some other stuff. So I put a lot of my efforts towards just towards fixing the site and getting it ready, doing some updates. All right, so where are we at? Well, look, we've been dropping for quite a while. It's been a long time since we've talked, but this move has continued its blast to the downside. The Dow saw it, the SPX, all of them have seen it, and it's just this slow grind downwards. So now, are we at a point where we could see a bounce? Are we at a point where we could see a future another future fall here? And the answer is yes, we certainly are. The truth of the matter is, yes, we are very extended down here, but every time I've heard someone say, boy, we're extended, we got to bounce soon, it just kept going down and it kept going down. This is very indicative of what you'll see in a wave three for all you Elioticians out there. Matter of fact, this is textbook. This is exactly how they usually work. They just bleed you to death. So for those of you that are bullish and trying to guess in here, I'd probably assume at this point that you're maybe bleeding a little bit. Fortunately, it hasn't been a huge, drastic move since we hit this 12,000 mark to the point where you've necessarily lost everything in your account. But you do need to be very cautious down here, keeping in mind that the bears are firmly in control and have been for a while. Here you can see us dipping down and getting close to these moving averages in and around these lower levels. Now, most of these lower levels have already been hit by the other indices. We just have not seen it in the Dow. Not uncommon for the Dow to lag a little bit because it is a big monster. It's a huge battleship, and it does take it a while to kind of turn its direction around. But you can see the slow move we've had, this quick step to the upside, which got the bulls all excited again, only to see the bears come in the very next day. And since then, it's just been a slow trickle all the way down. Looks like some sort of a finishing five happening down here if you're an Eliotician once again. And so, yes, could a bounce be close? You bet. But you don't take it until you get some confirmation. You got to get up into these areas here before you guys can really start to think about anything beyond being cautious. Really, I mean, is what it really boils down to. Very difficult to trade if you guys are trying to put money into the markets right now. I understand that there's probably a lot of gnashing of teeth, and for good reason. You just need to be very cautious with your money and pay attention to these overhead levels. Once they're broke, then maybe you've got a reason to start thinking about things again. But otherwise, it's looking like we could trickle down a little bit further. We got the 200 here before us. We got the 11.6 level below that in the Dow. Nasdaq showing us the same thing. When the tech stocks aren't working right, the rest of the market typically doesn't work right either, and that's what we've been seeing here lately. And you can see that they've had a much bigger move down. If you take a look right here at the daily, you'll see it crossing clearly below the 200 week moving averages or 200 day moving averages, showing us a lot of weakness in the markets right here. So this is very indicative of a very weak market. Very indicative of what we're seeing here is a wave three to the downside. I'm not real big on shorting the Nasdaq. Those of you that have been around long enough know that. So I'm very cautious about doing anything but going long. And now's not the time. Now's the time to be pretty cautious and just wait until some of these levels are taken back before you start even thinking about doing that kind of stuff. Notice how we're into some heavy levels of lower support, exactly as would be expected. And waiting here to see what's going to happen now. Will the bears take it down or will the bulls be able to hold this level? But even on any kind of a bounce, you still have this 200 to be watching as we push forward. NASDAQ weekly, same type of thing. Look at where that same level of support is found, not only on the daily, but also on the weekly. This just lends further credence to the strength of A, what the bears have been doing over the past umpteen weeks now, and B, to where the bulls have been sitting and waiting to see if they can claim this. Now, tomorrow is Friday. This is a weekly candle chart, so we will see where we close tomorrow. This will be the level that will be very closely watched in the markets. This and then the 50-week moving averages for sure. SPX coming right back into some nice lower level of support where it did find some movement. You can see what I've been referring to as the Humpty Hump coming down this move, and that is very indicative once again of kind of a finishing five type of a move. Getting these little camel humps in the market here as we push down and up and down and then up. And now, look, could we go back up? You bet. And then come back down? You bet. This is what the pattern's been so far. So you have to wait for these upper levels to be broken before you start looking at any kind of near bullishness to come back into the markets. SPX daily, same thing. This is where it's bouncing. Go figure, 200-day moving average. These are the things that have been touched and violated, touched if not violated on all the other indices. And this is what this is a very logical place to see some lower support come in. So, sitting here with what kind of a doji? Well, to be quite honest with you, you can call it a spinning top, call it whatever you want. It's really just kind of an indecision doji right now. It doesn't really give me any indication of a move up or a move down. I'm not sold on it. So you're still your moves are to watch to see if the bulls by the end of tomorrow can hold this 200-day, or if they're going to try to shove it back up into these higher areas. But it's going to take a while to really start to get the bulls behind the move if we can't get back up and above some of these overhead levels of resistance. The VIX doing what? Yes, pushing forward. This is what I've been waiting for. I told you that I get a little bit more on the markets when I start to see the VIX get up into and stay consistently above the 19 area. Now we are pretty extended up here, but there's no indication of a move up or down in the markets. The VIX could definitely spike higher than this and push those markets down. As long as the fear continues to come back into the markets, you will see the markets continue to plow out of it. Nobody likes fear. Investors hate fear. They don't like to be a part of that, and they won't be a part of it. They'll just take their money, put it aside, call it cash, and call it good. It's then the gamblers that step in and try to make a move, and that's when they get their hands slapped. So the VIX is doing what it needs to do. It's definitely what? It's confirming the move we've been seeing the last few days, and that is this push to the upside. Hard spikes down in the market, or in the VIX, should then correlate to a little bit of easing coming into the markets themselves. Right now we're hearing a lot about Greece and blah, 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 but once again, you followed me for any length of time, you know how I am about the news. I think the markets make the news in most cases. The news does not make the markets. So this whole Greek thing we've danced with before, and right now I think it's the only thing they can hold on to, so they're trying to blame this move on something. But the truth is the markets just are what they are. They're going to do what they're going to do, and then the news media will find whatever news they think necessary to apply to the move, whether it be up or down. So don't fall into that trap. Just play the charts. They're your best bet. Keep your fear, keep your emotion out of it. From a weekly perspective, too, we'll see where this closes tomorrow, but you can see we're finally back up and over that 50-week moving average in the VIX. And more importantly, guys, really, it comes down to that 1920 area that I've been talking to you about for quite a while. Look for that and cover that, and be careful of that as we push forward. FAS, Apple, I have taken off the charts. If you're curious about that, it is no longer on the daily charts. I do cover it on the subscribers newsletter. So for those of you that like to trade Apple or were following it for a while, you can get some more information on that through the newsletter itself. On what to look for coming up. I did leave FAS and FAZ on here because it's indicative of the financial markets, and I think they do help us get a little better understanding at times of where the rest of the markets may go, since a lot of times the indices tend to follow or tend to be led by the banks. The banks don't do so well, neither do the indices, and vice versa. Here we're seeing a potential double bottom being put in. If this double bottom proves to be legit, then we will see a bounce to the markets. So we know one's coming. It's just a matter of time. Nobody knows when, so it's not even wise to guess at when you think it's going to happen. Yes, we're into some very heavy lower support areas here, but this is a very good look at what could be coming here. So the FAS is down. It's potentially double bouncing down here, but we don't have confirmation of that. So don't get sucked into this quite yet. But if it is confirmed, gets back up into this area here, we will get confirmation of that. We should also see that coincide with a bounce in the markets, which makes for something for a lot of you FAS and FAZ lovers to really watch closely. I think there's good opportunities here. as we push forward. On a daily, it's not quite as pretty as it is on a 60-minute. Showing you the same thing on FAZ. You can see the potential double top being put in because it is the inverse of the FAS. The FAS, I think, is actually even maybe a teeny bit more clean than what we're seeing here. You know, I like the FAZ. It's typically been a more clean chart, if you will, over the last few weeks. But now either one of them is pretty good. Either one is pretty good. So it'll be interesting to see if the 52 area holds on the FAZ. If not, obviously, I think we're going to see that more bearish market um, move come. So FAZ tends to hold here. Now notice what it's doing. It's holding beautifully to the 200-day moving average. If this holds as support and we see that push up and above 52, then guess what? I think we're back into bearish mode for the markets for at least another, I don't know, for at least another few days, until we can just find some buyers, which have been absolutely absent. The big money is not interested in buying the market right now. Are we due for a pullback? Yes. Are we due for a small bounce? Yes. But you know what? This bounce could only be short-lived. Could only be short-lived. Matter of fact, it appears that's exactly what might be happening. So we'll be very cautious to see if this is some sort of a 1, 2, 3 move, or is it an ABC move. That will make a huge difference in the markets going forward. So nice to be back with you all again. Hope you guys missed me, because I missed you. It was nice doing these videos, and I will be back again sometime next week, probably Monday. Maybe I'll try to shoot for a video on Monday. And until then, guys, just be careful. You got to be careful with the markets out there. TA, beautiful tool, giving us lots of good indications lately. But you've got to be, of course, just very cautious about your positions at this point. We are ready for a bounce. We still have room to drop. Very neutral for me right now. I'm very 50-50 on the market. So careful of your money. That's where TA puts us today. We'll see you again next week. Bye.